Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio as always is Amit Ranjan. And it's a Wednesday morning and a bit of a bounce back we are seeing in the markets this morning. Nothing major. Nifty is still trading below the 21,900 mark as we speak. But good to see a green start this morning. Remember, tomorrow is the big day. Tomorrow the US Federal Reserve will come out with its policy decision. The broader expectation is that FOMC this time around will keep the interest rates unchanged. But I think what the market will keenly eye is what Mr. Powell has to say, because if there is any sort of a hawkish pivot, the market will perhaps react to it and react to it negatively. But overall, this morning a green start for us. The broader markets, they are also faring well this morning. And Amit, coming to you, even the global cues, they are looking better this morning, isn't it?
Unique day. There is green everywhere but one. I'll come to that later. 2 p.m. Tonight our time, or the 2 p.m. their time, is when the release of the economic forecast will happen. Half an hour later, Mr. Jerome Powell will have a press conference. They are likely to keep rates in the range of 5.25 to 5.5 unchanged, and they will also lay down the path to the rate cuts for the rest of the year. The lone red in all the markets in the West was Tesla, which was in the green till a few days back. Everything else in the green. Dow Jones closed in the green at 0.83%, S&P 500 0.56% in the positive, Nasdaq 0.39%. Coming to the European markets, 0.26% was where the stock 600 closed. Hang Seng this morning is in the positive at 0.31%, and Nikkei is in the positive at 0.65%. Green everywhere. A very unique day.
All right, a sea of green, as we like to call it over here in News 9, as far as the global markets are concerned, and a good start for us as well. As I mentioned, Nifty has opened in the green. It's trading slightly higher this morning, not above 21,900 just yet. But the other cues, we were tracking, we have been talking about the three horsemen, as we like to call it: Brent crude, the crude oil prices, your 10-year bond yields in the US, as well as the dollar index. They have also turned slightly favorable, not by much. I mean, the bond yields have eased by a few basis points. The dollar index, is kind of flattish, trading slightly higher this morning. Crude remains a problem. It is elevated. It is at a 4-month high at $87 a barrel. There is, supply side concern from Saudi and Iraq, as well as, demand is expected to go up in the coming months. So keep an eye out on that, because crude, of course, has big implications for our market as well. Remember, we are net importers of oil, so that does play a big factor. Also, it's, a lot of, for a lot of industries, this is a essential raw material, so the input cost goes up when crude oil prices rise. So keep a track on crude oil price, because that could play a spoil sport if at all there is a recovery. But to get the views on the market and understand if this bounce back can sustain going forward, and is the worst actually over, let's also bring on board Mr. Akshay Bhagwat of JM Financial. Thank you for joining us here on News 9, Akshay. Nifty had been defending 21,900 for the last 3, 4, 5 sessions, broke below it yesterday, but a good bit of a bounce back this morning. What's your reading on the markets? Because I'm seeing the global cues, they are looking also slightly favorable, but we are again in that expiry time. Today is a bank, Nifty's expiry, and of course we have the big event from a macroeconomic perspective with Fed FOMC decision tomorrow. What's the setup looking like for Nifty now?
Good morning, Suyash. We are trading at a very key pivotal level, as I understand, 21,850 plus minus 50 points, considering the fact that you are dealing with a very key economic event tomorrow, the Fed rate decision. So 21,850 plus minus 50 points is a very important point for the market. This is a point where it can be the trend decider for the remainder part of the March series. as of now, we are trading at a very key pivotal zone, and still, as it trades right now, the trend is positive for the index. So let's see how the market reacts tomorrow post the Fed policy. But as I understand, for day trading at least, we will see some bit of a marginal recovery because there has been a bit of short positions in the index, as I see in the futures and options segment. And ahead of the event, there is a good chance that there would be some bit of short unwinding, especially considering the fact that tomorrow is a weekly expiry for the Nifty index. So 21,800 should hold on for the day. That's an important support if you are a day trader. And in case the index recovers from here, then for day trading, 21,950 is where we look forward to. And from the weekly perspective, the key resistance point for the Nifty index would be 22,200.
All right, and I also wanted to get your views on Bank Nifty because, of course, it has been correcting for the last 8 sessions. I mean, the move has not been strong enough to warrant a headline, so it has pretty much gone under the radar of a lot of the traders and investors out there. Not you, of course, I'm sure, but 46,000, we are defending that. That's also critical because I think 46,000, 46,400 is the zone where 50 DMA and the 100 DMA is over there. Can we defend that this expiry day?
Yes, today the Sensex Bank Nifty should close in the green. It is expected to pivot around the 46,500 zone plus minus 250 points from where we are right now. As I look at the options matrix right now, 46,500 calls and puts are garnering a lot of accumulation in open interest, which just makes me believe that a single strike call and put have been sold, which you call it as a traditional short straddle, where time depreciation for the expiry day would play in if Nifty if Bank Nifty expires around the 46,500 mark. Yes, for the short term, that's for the coming week, 46,000 is a very important support. Broadly, if you keep read the Bank Nifty price action, it's in a range. 46,000, 47,000 is the range. It's going to be choppy. There is no clear direction at least. So Nifty, at least you are trading at a pivotal point, but Bank Nifty, it's going to be a bit choppy and all over the place. Keep short-term trading targets. Trade intraday, as at least for today, I feel there would be some bit of a respite in Bank Nifty. 46,750 can be the possible upside if you are a day trader in the banking index.
Good morning, Akshay. Now, quick commerce and specifically Zomato and Blinkit have been in the news lately quite a lot. Now, the promoters believe that Blinkit, which is the subsidiary company, may overtake the parent in the times to come, probably as near as 1 year. Going by the gross order value growth of the Q3 FY24, Blinkit grew 103% year on year. Zomato, the food delivery business, only 27% year on year. Looking at the Zomato stock, that has been in the positive, almost 200% returns in the last 1 year. Two questions. One, do you see a bifurcation in the two stocks and you have another listing around the corner? Or do you see any steam left, second question, in Zomato, or has it maxed out?
Good morning, Amit. As far as Zomato goes, if you are a short-term trader, the steam has fizzled out. If you look at the price action in Zomato in the last few trading sessions, somewhere or the other, there has been profit booking, which is pretty evident at the levels of 170, 175. These are the all-time highs, which we saw way back somewhere in 2021. And since these levels are revisited after almost a couple of years, 2.5 years, there is going to be some bit of selling pressure around the levels of 170, 75. So for traders, yes, the momentum has fizzled off. It might take some time to regain above 170, but I would consider this talk more from a delivery angle, from a slightly medium-term perspective. I would like to give it a time of minimum 3 months plus with the buy and hold perspective, where I see the level of 170 eventually being overtaken. So accumulate Zomato from current levels. 145, 140 are also good levels in case you get those dips whenever it happens. I am looking at targets of 225 plus strong positional targets. The broader setup is still positive. So accumulate Zomato, keep a longer term perspective, keep an investment perspective. 225 plus targets would be on in Zomato in the next 3 to 4 months.
All right, that's the view coming in on Zomato, but hospital stocks, I mean, they have been struggling lately. The fall in them, of course, was on the back of a Supreme Court order that calls for standard rates for medical treatment in private hospitals. But one particular stock saw a bit of a bounce back. Rainbow Children's Medicare, I mean, a strong 4.5% rally we saw yesterday. Even today, it's trading in the green, almost up 1%. I mean, what's the call over here, Akshay? Has the stock bottomed out?
Yeah, the initial sense the charts are predicting is that 1100 support is in place. The stock has been hammered a bit if you look at the last few trading sessions from 1450 to 1100, but the last 3 to 4 days recovery is almost around 30 to 40 odd percent of the fall which we have seen lately. It might take some time to stabilize because it's not going to be a one-way rally considering the kind of fall which you had recent times in Rainbow Children Medicare. So yes, do not time the trade from a short-term perspective. The stop losses would be below 1100, which are pretty big. Try to accumulate it in the range of 1150 to 1200. Might take time. Might again revisit the levels of 1150. Keep a stop below 1100. But the sense I'm deriving is that it will reattempt 1400 plus in the next 1 to 1.5 months. So yes, consider buying from 1 to 1.5 month perspective. 1400 targets look on. 1100 is the support. Your stop loss will be below 1100 and trade with a positive bias in Rainbow Children's Medicare.
Okay, Akshay, and what are your picks for our investors today?
A couple of trading picks, we had technical trading picks. The first one is SRF. It has a presence in the chemical space, and today it's a bit of momentum, but it has started off the March series on a positive note. It's been under a major sideways or a consolidation phase since the last 3 years, and the sense I derive from the price reading is that it is heading for a major technical breakout about 2600. So right now, I would like to take it step by step, keep more of a trading view on it, and target around 2560 to 2597 with a stop loss of 2415. So that's the first trade I would recommend. Buy SRF. The second trade is Kotak Mahindra Bank from the private banking space. Strong support building is seen at the level of 1700. Held on strongly compared to the other private banks in the last few trading sessions. The sense I derive is that the technical parameters are projecting a possible inverse head and shoulder bullish breakout above 1780. Accumulate at the current levels for that possible breakout, which I'm preempting. Your target area would be 1784 to 1805. And the stop loss would be 1700 on this buy trade.
All right, SRF and Kotak Mahindra among the top trading ideas from Akshay for this week. Thank you, Akshay. Thank you for joining us here on News 9. Always great insights from you, sir. But with that, let's slip into a short break. On the other side, Avinash Gorakshakar joins us.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcasts.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9, and the markets, they have reversed course. Remember, it had opened in the green, both Nifty and the broader markets, but there is weakness, and weakness has kicked in rather quickly, because Nifty is in fact below the 21,800 mark. It has broken below yesterday's low, which was around 21,973. And remember, yesterday we had put it out there that 21,900 was a key support for the index from a technical perspective, and that is where the index had been taking support in the last 4-5 sessions in fact. And if there is a break of a crucial support zone, the index could continue to remain under pressure for a bit and could see a correction of about 100-150 points. That was a word also coming in from our experts, and it seems that that is how it's playing out. We are halfway there. It has fallen below about 100-105 points from that 21,900 level. So some bit of a pressure there. More correction could be in the offing, especially because this is the time when a lot of the FNO contracts expire. Today is expiry for Bank Nifty. Tomorrow will be the expiry for your Nifty contracts, the weekly expiry, and next Thursday will be the expiry for your monthly FNO contracts. So expect volatility to be elevated going ahead, at least in the next week, and especially because it's a event heavy week and an event heavy couple of weeks. Of course, tomorrow we have the big one, US Federal Reserve, that comes out with its policy decision, so all eyes will be on that. And then apart from the Federal Reserve, a lot of other central banks will also come out with their policy decisions, so the markets will kind of react to as the decisions come out over the course of the next couple of days, but be cautious. There is caution in the system, and clearly look at the broader markets. They were trading, they actually opened on a flattish note with a positive bias, both mid caps and the small caps, but they are down 0.5%, more than 0.5%. Nifty mid cap and Nifty small cap are currently down by about 0.6%, and the recovery, remember the recovery we saw late Thursday last week and Friday, in fact even in Monday, if we are talking about small caps here, pretty much all of that is gone. We are back to the recent lows, so it will be very critical for both indices to defend those recent lows from a technical standpoint, because that could start another round of selling for the broader markets. But joining us in the studio now is Avinash Gorakshakar of Profit Mark Securities. Thank you for joining us here on News 9, Avinash. And I mean, in the last couple of weeks, most analysts, including yourself that we spoke to, they have shared a bearish outlook on the market. It was seasonality, froth in the broader markets, valuation discomfort, many reasons, they have shared for their outlook. But, and actually, to your credit and their credit, the markets have corrected. They have corrected quite a bit. But this week, I think the arguments are getting more balanced. The bears are saying that the valuations are still looking expensive. The bulls are saying, there are enough local tailwinds to keep the market from, seeing a major crash. Which camp are you in, sir?
So I think, first of all, good morning, Suresh. My sense is, see, why the markets are falling, and yesterday why we had a a big fall is because we have been talking to many clients, many funds, institutions. I think the most important thing which came out from our discussions is that follow-up buying is not coming in. So even a small bout of selling is sending the markets down quite significantly, and that is exactly Suresh what has happened yesterday. We saw TCS coming down. The markets did not like the idea of that OFS at all, and I think the stock got beaten down yesterday. And I think across the board they were selling because there was no significant buying either by the funds or typically the institutions. I think some amount of index buying was done, but clearly the broader market is showing a lot of weaker signs. In fact, if you look at the mid caps, small caps, the SME companies, I think they have corrected significantly, and I think things are not going to change dramatically. After the SEBI kind of order that there have been some misgivings in most of the SME companies, in the smaller and mid cap valuations have taken off, stress test by mutual funds. I think the markets have become a little alert, and as you rightly said, unless and until we don't see a very strong fund buying base from the FIs and the domestic funds, I think the markets are going to remain weak. I think one should not be surprised that we could even see lower levels, considering the fact that now with the election date announced, you're going to see a lot of volatility entering the markets. Typically, when the election schedule starts, you're going to see volatility both on the upside and on the downside. People will not look at fundamentals, but they would look at obviously election data points. So my sense is that I think investors need to be very careful, be very selective. It's not that it's the end of the road for the Indian bull market, but I think over the next, say, 1.5 months, the markets are going to remain lackluster. And most importantly, March, Suresh, as everyone is aware, is a month where a lot of adjustments happen. People file their returns. So at least till the end of March, I don't expect a kind of a major recovery. In fact, before the expiry this week and the monthly expiry, I think you could see a lot of volatility in the markets. So I think one has to be prepared for this. But yes, selective buying, obviously, if somebody has a contra view and the patience to hold on for the next 3 to 4 months, I think the best opportunities will come ahead of the election, because this is what actually happens every time ahead of the election.
All right, and Avinash, to your point, I mean, there is clearly a seasonality effect. I mean, March is the time when, a lot of investors and traders, something called tax harvesting, they book profits, actually losses in certain positions to reduce their overall tax liability. That is of course there. And even I was looking at the price chart just now, 20th March last year was also where we kind of bottomed out. If we are to rally from here on, if we are to repeat history, maybe that, once March is done, maybe we get the markets take off once again. So seasonality factor is of course there. But moving on, of course, the big event to track now is the US Federal Reserve policy decision. And I think at this point, sir, no one is expecting a rate cut. I mean, of course, the inflation data has been rather heated over there. Like it's come slightly hotter than expectation. What's your expectation? When will that first rate cut come? And more importantly, do you think that it will be a standalone rate cut, or we'll see a series of rate cut? Because that could happen, right? A standalone rate cut just to please the markets.
I think, Suresh, the Fed is definitely very clear that unless headline inflation comes down, they will not start the rate cut kind of signaling as well as the implementation. So I think this first rate cut which you said that to please the market they could give a rate cut, I don't think anything of that sort is expected. My sense is that we'll have to wait for a couple of months, and once data points and inflation are very clear, then I think the rate cuts could happen. I think we are in March, so I think my sense is that possibly from the month of June, the first rate cut could happen. And once it happens, Goldman Sachs itself has pointed out in their recent research report that they could expect not 2 but 3 to 4 rate cuts. So I think rate cuts could happen dramatically. So I think the markets are definitely looking at this as a major trigger. I think in this policy which comes out, I think markets should look at the commentary from the Fed governor. I think what is the thought process? Clearly, I think another couple of months and I think this could be a reality. So I think we are very near to the rate cut. I think it will definitely happen, but we'll have to probably wait for 1 or 2 months before the process starts. But I think it's definitely expected to happen. It's not that it would be delayed for a long period of time. And I think that is something which is going to comfort the markets, hopefully in the next 2 to 3 months ahead.
Good morning, Mr. Gorakshakar. Now, infrastructure, leasing and financial services has been in the news. They have approached the NCLAT to restrain 11 public sector lenders from initiating proceedings to paint it as a willful defaulter. IL&FS is one of the oldest landmarks in the iconic Bandra Kurla complex. 2018, it fell off the radar with a 91,000 crore default. Some of their subsidiaries are still listed and traded, not doing very well. One of them, of course, engineering and construction, did give 117% returns the last 1 year. Now, what does it take for a giant as big as IL&FS, which was so much in the news, right in the forefront of activity till about 5 to 6 years ago, to redeem itself? Is it even going to happen with infrastructure being one of the mainstays of this government and probably the next? Or they will have to come back in a different avatar, if at all?
I think it's a very difficult question to answer, honestly, because a lot of news has flowed after the default which happened with IL&FS. But I think one thing is very clear that regulators as well as policy makers who are appointed to take charge of this entire process, the decision making has been pretty slow. So my sense is that this institution needs to now clean up its balance sheet, has to attract more fresh capital, and I think has to obviously have a new management team, some new blood which could actually reinforce confidence in the markets. It's a very old institution which has done commendable job, but I think somewhere things went wrong, and I think now to recoup it, obviously the need of the hour is either it comes out in a new avatar, or maybe the existing structure has to be recapitalized by fresh money, a new management team, and obviously a kind of a reassurance and some commitment from the management side. I think unless that happens, confidence in IL&FS is not going to come back that soon. So I think for the government and as far as the regulatory agencies are concerned, I think we'll have to wait and watch what is the next step to be taken. But this willful defaulter tag is something which I think has to be debated. One really doesn't know what is the current status, but I would be more convinced that the government would definitely do something which could recoup the process of reconstruction, and possibly we could see a new company emerging out and possibly fresh capital infused in the company. So I think we'll have to wait and watch for some time. We cannot comment on this as of now, but yes, things if they have to improve, they will have to take some major decisions to ensure that continuity happens, and all the banks who have got money stuck up here are paid on time.
All right. And sir, before we let you go, we have to talk about oil, because that has been creeping up slowly on us. It's up almost 6% in a matter of a week, and at a 4-month high now, $87 is where Brent crude is at. Of course, it's bad news for us. We are net importers. It's essential raw material for a lot of industries, so input costs would go up. But are we in that uncomfortable territory now?
Oh, Suyash, I think these oil prices have been rising. I've been reading that possibly because of Russia's supply constraint. Russia has not been supplying adequate oil. So I think we'll have to wait and watch. But yes, this is definitely a worrisome sign. If crude goes up further by say 5 to 6%, then the first hit is going to be taken by the oil marketing companies, and then obviously by all the importers who are dependent on crude-based products. Specifically, companies like lubricants, typically chemicals, paint companies. So obviously, that is going to hurt their margins if this rise continues and we see another 6-7% increase. Oil had been soft for a long time. In fact, that is definitely not good news for inflation also, because if oil spikes up, then overall WPI inflation also gets impacted. So we'll have to wait and watch. I think it definitely now remains to be seen how global oil prices behave. But I think around 82, 83, if it settles down, then I think we should be comfortable. So we'll have to wait for at least a couple of months before we could take a conclusive call that now crude is again going to see further new highs.
All right, that's the verdict coming in from Mr. Avinash Gorakshakar. Great insights from you as always, sir. Thank you for joining us and be sharing your thoughts on News 9. But before we wrap things up, let's look at the markets, because they are falling. They have reversed course. We have broken below the 21,800 mark, and in fact we have broken below yesterday's low as well, which was at 21,793. We are currently falling from there. A bit of a bounce back from the day's low. Nifty currently is down about 0.1% at 21,795. Sensex is down 0.16% as well. The broader markets continue to remain a concern because remember they were staging some bit of a recovery late last week and early this week as well. At least the small caps were, but all of that is pretty much gone with today's fall. Nifty mid cap 100 as we speak is down 0.65%. The small cap index is worse off, is down 0.76%, and volatility. We are in that zone actually, 13-14 levels. I think that's nothing to worry about. We have spent a lot of time in that 15-16 sort of a range. So I think 13-14, Amit, I think that's the new normal as far as the markets go. But with that, on that note, it's a wrap in this edition of First Take. Thank you for watching, and up next is World Business Report.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The rest